Welcome to today's TLDR on Crypto News, where I give you a quick rundown of the top crypto news stories from the past 24 hours so you don't have to waste your time reading it yourself. For those who want to read the full articles, I will leave a link to each article in the description. Each story is broken down into key takeaways and what we might expect next. I'm going to break down each story into simple to understand lingo for the everyday retail investor who doesn't care about the fluff. Let's start with the Sui network crash. The Sui network crashed, halting block production for over an hour, raising concerns about its reliability and stability. The key takeaways? So, the Sui network, which some folks call the Solana killer, had a pretty dramatic faceplant. It stopped producing blocks for over an hour, which in blockchain terms is like your car breaking down on the highway during rush hour. This happened because of what's called a DOS, denial of service bug. Basically, something overflowed in the system, like when you try to pour too much milk into your cereal and it spills everywhere. The network just couldn't handle it. When the SUI network went down, its token price took a nosedive, dropping by about 11%. This kind of drop shows how sensitive crypto markets can be to these network hiccups. Investors started hitting the panic button faster than you can say blockchain outage. The crypto community was buzzing like bees at a picnic. Some were comparing it to Solana's past issues, while others were on the edge of their seats waiting for the network to come back online. Upbit, a major exchange, had to pause Sui deposits and withdrawals because, well, when the network stops, so does the money flow. Expectations moving forward? After this little digital meltdown, everyone's expecting the Sui team to beef up their network's defenses. They need to find the equivalent of a network strength trainer to make sure this doesn't happen again. The community is looking for better stability, like you'd expect from your Wi-Fi when you're in the middle of an important Zoom call. Investors are probably crossing their fingers, hoping the price will bounce back like a rubber ball. They'll be watching the market like hawks, waiting for any sign that Sui is regaining its footing. There's an expectation that if the network issues get sorted out quickly and effectively, Sui might see some of its value return, much like how a stock can recover post-bad news. The real test will be how the community reacts long-term. Will they stick around like loyal fans at a band's comeback concert, or will they start looking for the next big thing in crypto? The Sui team's response to this incident could either strengthen trust or make people more skeptical about relying on the network for the long haul. The Sui blockchain had its moment in the spotlight, but not in the way it probably wanted. Now it's all about recovery, reassurance, and proving that it's not just another flash in the crypto pan. Next, let's talk about the big story. Bitcoin continues to push closer to $100,000 after hitting new highs. Whales and long-term holders are fueling the growth. The key takeaways? Whales and long-term holders seem to be the drivers. It's like the big fish in the Bitcoin sea are not just swimming around, they're buying up tons of Bitcoin. These whales have added a staggering 56,397 BTC to their stash over the last month, which is worth about $5.42 billion. That's like saying a bunch of folks with deep pockets are betting big on Bitcoin, showing real confidence in its future. Imagine you've got Bitcoin you bought a while back and now it's worth a lot more. If you were a long-term holder, you'd be looking pretty smart right now. These holders aren't cashing out their profits just yet, which tells the market that they're in it for the long haul, expecting Bitcoin to keep climbing. This patience adds a layer of stability to the market. Bitcoin has just hit a new all-time high of 97,864. This surge isn't just random, it's supported by the big players in the game, showing that the momentum is real. So what can we all expect? Now that Bitcoin has touched this high, it needs to stick around here or above to keep the party going. If it can turn 97,864 into a new support level, think of it like laying down some solid ground to build a skyscraper. This stability could be the push it needs to reach $100,000. However, watch out for profit taking. If everyone starts cashing out their profits all at once, it could be like pulling the rug from under Bitcoin's feet. It might dip back down, especially if it can't hold above $89,800. Continued confidence is key. The road to $100,000 seems paved with the continued confidence of whales and the long-term holders. If they keep holding or buying, Bitcoin might just make it there. In essence, Bitcoin's journey to $100,000 is like a roller coaster ride where the biggest thrill comes from watching the big investors keep their cool and their coins. If they stay committed, we might just see Bitcoin breaking through that ceiling, but if they get cold feet, well, we'll see a different kind of show. Remember, in the world of crypto, it's not just about the numbers, it's about the belief behind those numbers. The next story is about Cardano's recent surge. From newsbtc.com, Cardano outperforms the market with a 50% surge. The key takeaways? Cardano, ADA, has had a pretty wild ride lately, jumping up by a whopping 50% in just a week. Whale activity, you know those big fish in the crypto pond? Well, they've been swimming around Cardano's waters like they found a new favorite snack. The number of transactions over $100,000 has skyrocketed, and the total transaction volume hit a high for the last 7 months. It's a feeding frenzy, but instead of krill, it's ADA. The crypto market has been on a roll, especially after some good vibes from Trump's win in the US election. It's like the whole crypto party got a second wind and Cardano is dancing to the beat with some fancy moves. Technical breakthrough. Cardano broke through the stubborn resistance level at 40 cents, as if it finally popped that zit that's been haunting it for weeks. This break is a big deal because it's a sign that ADA might be ready to strut its stuff and head higher. So what can we expect now? Continued surge. If Cardano keeps this momentum going, we might see it hit new all-time highs. Everyone's watching to see if it can maintain this marathon pace or if it'll need a breather. With the crypto-friendly vibe in the air, big players might start looking at Cardano Expect more big money moving in if ADA keeps its charm offensive up. But don't get too giddy. There's talk of potential price corrections. Like a good party, there's always a lull. And ADA might take a little dip before swimming back up. So Cardano's making waves, and while there's a lot of excitement, remember, in crypto, as in life, what goes up must sometimes come down, at least for a bit. Keep your eyes peeled and maybe don't bet your entire life savings on it, but hey, if you're feeling lucky, why not join the dance? Well, unfortunately, we have to sometimes talk about the bad with the good. The next top story is about Logan Paul being, that's right, you guessed it, involved with yet another alleged crypto scam. So let's get some details from CoinGape.com. The key takeaways? Logan Paul, known for his YouTube antics and wrestling, decided to jump on the crypto bandwagon with a project he called Crypto Zoo. Imagine this, a game where you could buy digital eggs, hatch them into animals, and trade them. Sounds fun, right? But here's the twist. The game never really took off. People bought into it with real money, expecting a fun game that would also make them some cash, but what they got was more like a digital pet rock. Enters CoffeeZilla, a YouTuber who digs into shady dealings. He did a deep dive into Crypto Zoo, labeling it as a potential scam. He pointed out that while everyone was waiting for the game to hatch, key figures involved in the project were selling off their assets, leaving fans with nothing but digital eggs that never cracked. Following CoffeeZilla's expose, Logan got slapped with a lawsuit. Investors felt they were left out in the crypto cold, and they wanted their money back plus some. The accusations included fraud and misleading promotion, turning what was supposed to be a fun game into a legal battlefield. However, Logan Paul didn't just take this lying down. He initially threatened to sue CoffeeZilla for defamation, but then he pulled a U-turn, apologized, and promised to make things right. He even shared plans to potentially relaunch the game or compensate affected fans, though these promises have been met with skepticism. As far as we know, he hasn't done anything yet. So what can we expect next? Moving forward, there's a big expectation for Logan to be more transparent about his projects. If he's going to relaunch Crypto Zoo or start any other venture, people expect him to keep his community in the loop, not just when things are going well, but especially when they're not. The crypto world is watching closely. There's an expectation that this might serve as a cautionary tale for other influencers who think they can just slap their name on a project and watch the money roll in. The community wants assurances that these ventures are legitimate, not just another way for influencers to cash in. Given the high-profile nature of this case, there's an expectation that regulators might start looking more closely at how celebrities and influencers handle crypto promotions. This could mean new rules or guidelines to protect fans from being led down another digital rabbit hole. So that's the saga of Logan Paul and Crypto Zoo in a nutshell. It's like if you bought a game ticket only to find out the game's been delayed indefinitely, and now there's a lawsuit over the snacks you bought while waiting. Keep your popcorn handy, because if there's one thing Logan Paul knows how to do, it's keep the drama coming. Next, we move on to our friends at BitcoinMagazine.com, and yesterday's article about US strategic Bitcoin reserve FOMO is being horribly oversold. Let's dive into what's got everyone buzzing about a US Bitcoin reserve. The key takeaways? The US already has a lot of Bitcoin. The US government has been quietly amassing Bitcoin for years, turning it into the biggest governmental crypto hoarder globally. This isn't about starting from scratch, it's about what they're already sitting on. Lobbyists are stirring the FOMO pot. There's this frenzy on platforms like X, formerly Twitter, where industry insiders are pushing hard for the US to officially adopt Bitcoin as part of its reserves. Political moves. There's talk of an executive order from President Trump to make this happen right away. State-level enthusiasm. While the federal government is pondering, some states are like, hold my beer, we're doing this ourselves. They're eager to jump on the Bitcoin bandwagon before the national government does, aiming to score some patriotic points. So what can we expect next? While having the US buy Bitcoin would be like winning the lottery for crypto enthusiasts, the real play here might be more about setting up the stage for broader adoption. Think less about the US government just stockpiling Bitcoin and more about creating an environment where Bitcoin can thrive. Regulation over accumulation. There's a big push for regulations that could make life easier for the crypto industry, hoping for less red tape so that businesses can actually use Bitcoin without feeling like they're navigating a bureaucratic maze. Long-term strategy over short-term gains. The focus seems to be shifting towards a long-term plan for the US dollar in a world where digital currencies might just be the new gold. It's about playing the long game, not just cashing in on today's hype. In essence, while the idea of a US strategic Bitcoin reserve sounds like the ultimate endorsement for Bitcoin, the real deal might be more about strategic positioning and less about immediate action. The excitement is there, but the real benefits might come from the groundwork being laid for the future of currency and finance. The crypto community is all in for the ride, but they're also looking for more than just a quick price bump. They're in it for a revolution in how we think about money. So, you know how China has been pretty tough on crypto? Well, there's a new twist that might make you raise an eyebrow or two. Here's the scoop. You can find this next story at cryptoslate.com, but here are the key takeaways. In a surprising move, a Shanghai court has said, hey, you can own crypto as personal property. That's right, if you've got Bitcoin or Ethereum in your digital wallet in China, you're in the clear legally, at least for ownership. Think of it like owning a rare baseball card. It's yours, but don't try to sell it as part of your business. This ruling came from a case where a company promised to give out tokens but didn't, leading to a legal tussle. The court decided that even though crypto trading Bitcoin got the big no-no in China back in 2017, owning it as a personal asset is okay. However, if you're thinking about turning your crypto collection into a business empire, hold your horses. The court made it crystal clear, businesses cannot engage in token issuance or crypto investments. The court warned that crypto could disrupt financial systems and might be used for shady dealings like money laundering. So, while you can collect crypto in China, you can't commercialize it. So what can we expect moving forward for our friends living in China? Personal ownership might grow. Now that owning crypto is officially recognized, expect to see more Chinese folks dipping their toes into the crypto pool personally. However, don't expect a sudden surge of crypto businesses in China. The ruling keeps the door shut on that. Potential for more clarity. This ruling might push for more legal clarity on crypto in China. Maybe, just maybe, they'll start making rules that are less about no and more about how. Even though you can own crypto in China, remember China's still on the lookout. If you start flaunting your crypto wealth or trading it like it's the stock market, you might still get a knock on the door from the authorities. So, there you have it. China's giving a nod to personal crypto ownership, but businesses, they're still out in the cold. It's like being allowed to have a cool car, but not being allowed to start a taxi service with it. Keep that in mind, and you'll be navigating the crypto waters in China just fine. Next, we move on to gold. According to the block.co, gold's been getting upstaged lately, and it's all because of Bitcoin. Here's the scoop. The key takeaways? Institutional love for Bitcoin. Institutional investors are starting to flirt with Bitcoin more than ever. Analysts are seeing these big players put money into Bitcoin, not just for fun, but because they believe in its future value. This shift is like watching a high school prom where the shy, book-smart kid, Bitcoin, suddenly gets all the attention from the popular crowd, institutions. Gold ETFs have been losing their charm. Investors have pulled out a hefty $3 billion this year alone. This movement away from gold is making analysts think twice about where the real safe haven money is going. Bitcoin ETFs are the new cool kids. On the flip side, Bitcoin ETFs have been raking in the dough, with over $4.1 billion flowing in. It's like Bitcoin's not just at the party, but everyone wants a piece of that action. Bullish sentiment for Bitcoin. Analysts are pretty optimistic about Bitcoin. They're saying things like, Bitcoin's not just here to crash the party, it's here to buy the house. And this optimism stems from the institutional adoption and the infrastructure supporting Bitcoin's growth. What can we all expect next? There's a good chance Bitcoin to keep rising. With institutions jumping on the Bitcoin bandwagon, expect Bitcoin's price to keep climbing. Gold might lose more ground. If this trend continues, gold might start feeling like last season's fashion. It's not going away, but it definitely won't be the talk of the town anymore as Bitcoin steals the spotlight. Market dynamics will shift. The financial scene could get pretty interesting. This shift might mean new strategies for investors, possibly leading to a more dynamic and perhaps volatile market environment. So, in a nutshell, Bitcoin's becoming the shiny new toy in the investment world, while gold's getting a bit of a cold shoulder. Whether you're a gold bug or a crypto enthusiast, it's an exciting time to watch how this economic dance unfolds. The next article, Vitalik Buterin buys Anon. Token surged 350%. What's it all about? Can be found on decrypto.co. So what's the deal with Anon? Key takeaway 1. So Vitalik Buterin, the brain behind Ethereum, decided to play a game of guess who bought this token and picked up 30,303 Anon tokens. Anon is this new kid on the block, or should I say base chain, that's all about anonymity. It's like having a secret identity in the crypto world, but with tokens instead of capes. Anon isn't just another meme coin. It's tied to Anoncast, an app where you can post anonymously on Farcaster if you've got enough tokens. It's like a cloak of invisibility, but you need to pay for it with Anon tokens. Key takeaway 2. After Vitalik's wallet was spotted making the swap, Anon went from being a nobody to a somebody, jumping 350% in value. This surge shows how influential figures like Buterin can affect crypto markets. His purchase not only increased the token's visibility, but also its market cap, which rocketed to over $36 million. Key takeaway 3. Anon was actually created by an AI named Clanker, which is pretty meta. This AI deployment adds an extra layer of intrigue to Anon, suggesting that future tokens might not need human creators. Clanker was prompted on Farcaster to create this token, which then sparked a whole community around it. What can we expect? Expectation 1. This little token might just be the start of something bigger. With Vitalik's involvement, Anon could become a case study in how AI and human interaction can lead to new crypto trends. Imagine if every time someone famous like Vitalik buys into a token, the crypto world starts treating it like a new blockbuster movie release. Expect more eyes on Anon for sure. Expectation 2. Privacy and anonymity are becoming hot topics again. Anon might pave the way for more privacy-focused applications, especially if more developers see the potential after this surge. If you thought privacy was just about incognito tabs, think again. Anon might inspire a wave of apps where you can share, trade, or just vibe anonymously, which in today's data-hungry world could be a breath of fresh digital air. Expectation 3. The whole AI creating tokens thing, that's probably not going away. We might see more AI-generated tokens or projects, turning the crypto space into a playground for both human and machine creativity. Pretty soon, we might need to start watching AI trends as closely as we watch celebrity crypto moves. Who knows? The next big coin could be designed by a bot with a knack for blockchain. So in a nutshell, Anon's sudden fame is a quirky blend of celebrity endorsement, AI innovation, and the eternal desire for privacy in the digital age. Keep your eyes peeled. This could be the start of something even weirder and more fascinating in the crypto universe. The next article summary. Is MicroStrategy a bubble? What's the risk for Bitcoin's price? Found on Cointelegraph.com. The key takeaways? MicroStrategy's Bitcoin bet. MicroStrategy has gone all in on Bitcoin, using borrowed money to buy it. They've got a big plan to raise $42 billion to keep this Bitcoin buying spree going. They've already turned a chunk of this into Bitcoin, making them one of the biggest corporate Bitcoin holders. It's like they've turned their business into a Bitcoin piggy bank. Leveraged exposure. By borrowing to buy Bitcoin, MicroStrategy gives investors a chance to bet on Bitcoin's price with extra oomph. If Bitcoin goes up, so does MicroStrategy's stock, but with potentially bigger gains due to the borrowed money. It's like using a credit card to buy stocks, hoping they'll go up enough to pay off the card and then some. Convertible bond strategy. They've issued bonds with no interest. Instead of paying interest, they're hoping their stock price will rise, letting bondholders convert these bonds into stock for a profit. They're essentially telling investors, we won't give you interest, but if Bitcoin soars, you get a piece of that pie. What can we expect? The worry is whether MicroStrategy can keep this up if Bitcoin's price dips. If Bitcoin crashes, they might need to sell off their holdings at a loss to pay back debts, which could spook investors. Bubble talk. People are starting to wonder if MicroStrategy's stock is in a bubble, trading at a high price compared to what their Bitcoin is worth. If Bitcoin or the market sentiment shifts, this bubble might burst. Risk to Bitcoin's price. If MicroStrategy ever needs to sell Bitcoin in a hurry, it could push Bitcoin's price down. It's like if everyone at a party decides to leave at once, causing a rush for the exits. That's it for this video. If you haven't yet, please subscribe and share. It will allow me to continue making great summary videos for you. Thanks for watching. I'll be back tomorrow for another TLDR of the latest news in crypto.